Hello and welcome to Your Budget Trades, something that we do every year. And the most interesting thing this year is, Aisha, is that the market was anticipating things which would have been a lot worse.
LTCG, and that's not come about. Yeah, thankfully so. And look at the kind of volatility that one has seen in a single trading session. Not like it's coming out of the box. We were expecting, given how short the market was ahead of the event. But what a relief rally, and that also got sort of tapered into.
Yeah, but as I said, I'm just happy that we got out of the day on the right side. We didn't get out too much on the wrong side, and which is arguably a really good decision.
Arun Jaitley does win the Oscar, finally.
Yes, he does. As does Leo, by the way.
Yeah,
after
finally.
a really long time, yes. So, quickly take you through what some of the highlights of the budget were, and arguably the 2 or 3 macro and the 2 or 3 micro ones. Let me talk about the 2 or 3 macro ones, of course. Fiscal deficit at 3.5% for the next year. So, the government has kept its credibility intact, and they're sticking to the target of 3.5% of the GDP. Everybody knows that. No change in long-term capital gains tax. That's a really big relief of sorts for the market. So that is 2. Very, very important from a market perspective. Here and there are a few tinkerings, and I'm sure Aisha will refer to a lot of those as well, sectoral impact that came in. But the other key thing from a macro standpoint is amnesty that comes in for people who have not disclosed income until now. Pay a one-time tax of 45%. No scrutiny. You go scot-free. Of course, it's, Aisha, one more revenue measure for the government. And in 1997, I remember VDIS, na bhuto na bhavishyati. It's come in after 19 years. Maybe helping the government.
That's a strong memory, Neeraj.
Oh,
I would have
yes.
assumed you're way younger. Okay, let's just quickly walk you through what the top 10 highlights really have been from the budget then. The FY17 fiscal deficit target stays now at 3.5%. Now, you saw a huge bout of move in the entire PSU bank pack. Why so? That the FIIs were really watching out for this particular figure. So that stands. More importantly, this has also brought about heightened expectations now of a reserve of an interest rate cut by the RBI, which could be as soon as this week itself. So yes, a fair amount of relief in the currency market, and the bond yield spike that we had been suffering with in the last 10 days or so, the kind of FPI sell-off, the yields have softened, so that really has been a big relief. PSU Bank recap, that has come in little sub-expectations, considering the street was expecting a figure higher than 25 to 30 odd thousand crore rupees. That stands at 25,000 crore rupees. The total outlay for infrastructure, that's at a sizable 2.2 lakh crore rupees. Excess duty on tobacco has been up to 10-15%. Again, this is something that we were expecting. 45% tax on undisclosed income, that is something that the street should be happy about. Disclose your black money, get a one-time tax, no question asked on that. No change in income tax slabs as well. That would be a little bit of a neutral. And yes, dividend tax on all HNIs, that may not be all that positive. Infrastructure cess and petrol, diesel cars, again, on expected lines. STT on options has been hiked. That may not be all that positive for the street.
Yeah, so let's talk about all of those. In a bit, we'll get in the sectoral highlights, but let's just get that initial reaction from our technical experts and future option experts as well as to how the market move for the day impacts their thoughts on what the markets could do over the course of the medium term. C.K. Narayan, Mitesh Thakkar, Siddharth Bhamre, with their sense of how the trade setup is looking like. Gentlemen, all of you, thank you so much for joining in. C.K., we were talking about it in the morning. Historically, volatility on the budget day has been high. No different this time around. The key is 1 week, 1 month post the budget, there are hardly any big bang moves. Would this time around be the same?
Well, as far as volatility is concerned, we had more than our fair share compared to the last 3 years, where we averaged about 2.5-3%. Today it was about 4.28%. So definitely on the higher side. But looking at 1 month from today, I think it will largely depend upon what sort of positions get built up. I think one of the key features of this budget was that we went into it pretty light. And today's volatility, I don't think would have really left too much of positions in there. I don't think we have longs which have been carried into tomorrow or shorts carried into tomorrow in any sizable number. So I think position build is going to happen starting from tomorrow. Whether that will depend upon whatever fine prints that emerge, or it'll depend upon whatever fresh buying, selling that emerges tomorrow. I think it'll get built up across. So it's very difficult to take a call right now about 1 month into the future. As things stand, we have to side with the existing trend, and the existing trend has been down. So until we see some kind of an upside breakout, which I would qualify at about 7,050 or 7,100 on the Nifty futures, until we see that, we are certainly not in the clear.
Siddharth, what is it that you've made of this hugely volatile day? Eventually, we were sub 7,000.
Yeah, in fact, for a brief period of time, we did go below 6,900 as well. I saw three main points to which market reacted negatively. First, it started with PSU numbers. I mean to say the recapitalization number. Then we had this corporate taxation about 29%, where people miscued that it's 29% for not just for 5 crore turnover, but also for companies higher. Then the last thing which happened was on STT announcement, and along with STT announcement we had this 10-15% tobacco rise in excise. That led ITC and stocks coming down. Later all these 3 points were not so negative, because STT impact, if you see, it's hardly anything. STT is charged on options only when you sell an option, not when you buy an option, and the percentage is 0.1017% on premium value, not on contract value. So for a Nifty option which is trading at $100, you are actually paying STT of say 1 rupee 25-30 paisa. And now they are saying that it has gone up by 3 times. Fair enough, gone up by 3 times, but it is still 3 rupees 25, 3 rupees 75 paisa. So that's not a huge thing. So people realized it, and then you saw that bounce back coming back into the markets. So I'm taking a lot of positives from this. Let's accept the fact that the only talking point before the budget was long-term capital gain tax. Yes. And I want to find out the person who had spread that rumor that this is going to happen, and it didn't happen. Otherwise, market would have stabilized at 7,200 and wouldn't have corrected to these levels. So I think we are heading back to those levels. I'm not saying bottom has been made, but then it is quite likely that taking this budget into consideration, a lot of negatives have not come. Long-term capital gain tax, even the service tax, which people are talking from 14% to 16%, even that has not come. So I believe that, and most importantly, we have seen reduction in implied volatility today. From 23%, it has come down to 20, sub 20 in middle of the day. So I take a lot of positives from these. I won't get too much perturbed if today FI has come out with say 1,000 crore of sell-figure number. But looking at the structure of the market and implied volatility where it is moving, we have seen beginning of this series 7,500 call also has added good amount of open interest. Sure. I'm not expecting 7,500, but I think we are moving towards 7,200, and there probably we can take a fresh call.
Right. Mitesh, is that your view as well? Is 7,200 now in sight?
Afternoon, I'm still not sure. To be very honest, I think I would need some kind of market action to convince me that we are heading on the upside, and that's lacking. I would still want to see the Nifty capture 70, 80, 7100 zone. I think that was the gap down level on Wednesday last week, and I think that level still acts as some kind of supply zone. I've heard, I think Nikunj as well as this gentleman Siddharth was also talking about drop in IVs, but I think an event taken possibly when it's over, I think some drop in IVs is very natural. So I would not take that as a very positive factor. But I would still want to see some kind of price action to come in. See, nothing negative came in, the budget was all good, but I think the price action didn't suggest that, there was a lot of buying happening. Yes, there was recovery from lower levels, but then again, I think it was quite useful, and it was, the fall also, I think, to me appeared very shallow given the fact that it happened with kind of sudden jerk without any kind of volumes, and it was just a misinterpretation of some kind of news. So overall, I think when the market stabilized towards the end of it, I think there was not much of a strength which I would have liked to see. I would still want to see the Nifty get past 7,100. The Bank Nifty, which was showing some signs of reversal, still about 230. That also kind of tapered off. So I think if the Bank Nifty can sustain above 14,000, 14,100, then I think it might be able to pull the Nifty. Let's not forget that the Nifty ID had a very weak closing. So overall, I think I would want to see the Bank Nifty perform, or the Nifty, start to get past 7,100, either on buying or on short covering. I think that will confirm some kind of short-term low being made.
Yeah, the other thing is that the state seems to be set for some action from the Reserve Bank as well. Fiscal deficit has been maintained. The government has stuck to its end of the bargain. China, PBOC has come out and cut their reserve requirement ratio by about 0.5% as well. So the neighbor has done it. Not that it's really the lead indicator, but all I'm saying is that the market was worried whether 3.5 will be held or no. I think it's been held suitably. The budget is not inflationary by any standards of imagination, no increase in the service tax. So I think that decks are all set for some bit of rate action from the Reserve Bank. And if that happens, a bit of a fillip that comes in for some of the rate sensitives, particularly the banks. But we'll talk about this point in moments from now. First, let's get in Ajay Sharma from our research desk to talk about the sectoral impact, all the sectors that moved around and actually got impacted as well as a result of the budget moves. Ajay.
Well, that's correct. It was a very volatile session for the market, almost 250 points plus kind of a gyration on the Nifty. But we've identified a group of stocks which are particularly moving due to the announcements in the budget. Maruti Suzuki, the index stocks, big 5% move coming in because the duty structure on CNG vehicles and small vehicles have gone up. MCX, another 6% move coming in from this broader market stock because single individual FDI limits to be held in exchanges have been hiked from 5% to 15%. Similarly, Jet Airways and other aviation stock came under pressure. Duty on ATF has been hiked from 8% to 14%. Branded apparel also saw some duty hikes up to 6%. The stock fell over 6.5%. ONGC, the big oil and gas company, the state-run company, fell over 10% in trade. There was a benefit coming in for ONGC. The duty structure has been changed from fixed to ad valorem, but the benefit was much lower than what the street was expecting, and this one got a drubbing of 10%. Titan jewelry, especially the imitation jewelry, again has witnessed hike as far as taxes are concerned. ITC, though there was a hike in excise duty, closer to 10%, but it was lower than what the street was estimating. So the stock fell almost 10% plus on an intraday basis, recovered and ended higher by 2%. The big surprise mover from the index component was actually Reliance Industries. 2% up move coming in. From a negative 1%. This is because the government has, the finance minister has indicated market-related gradual prices for natural gas, especially in deep water oil blocks, and this is the beneficiary of that. Otherwise, on a macro front too, the government or the finance minister has kept the fiscal deficit target to 3.5%, which is a positive surprise. Clutch of PSU banks like SBI, which gained 2%, were also reacting to trade. So it was otherwise a very volatile session, but a group of 9 stocks which we've identified for you, which were particularly active in today's session.
Thanks for that, Ajay. So that's fundamentally what really moved around. What we'll try and do is come back and get our experts to tell us what you as a trader should be doing with a lot of these stocks and more. Some ideas post-budget from all 3 of our experts. That's coming up. Stay tuned. Back with your budget trades, and in conversation with our 3 experts, we've dissected what the budget meant for separate sectors. Now the idea is to give you simple advice on how to approach trading in all of these names. And CK, let me start off with the biggest one, and that has to be ONGC, or CAN for that matter. 2 stocks which got hammered down, maybe because the expectation was that something meaty will come about. It was not as meaty, and therefore a 10% drubbing that ONGC took. What does somebody do now on an ONGC, assuming he wants to enter into a trade tomorrow or over the course of the next few days?
I think the 10% down that you saw today was actually unwinding of long positions, which had been built up in anticipation of some relief, which was quite firmly bruited about, in the markets. So I don't think you'll see a repeat of this going ahead. So you could possibly see some a little bit further unwinding. So maybe another 2-3 more % of fall might be there. But I think those who are holding it should continue to probably hold it because you might have a rally. I'm not really calling for going in there and buying ONGC because there is really no case for doing it. Right now, whether it is ONGC or Kane, there really isn't any arguments for buying it. As far as selling it on the basis of today's performance, I would say it's not on because I think much of the unwinding would have probably been done.
Siddharth, you did briefly mention about PSU banks, but I'm going to take it forward from there. Do you see a continuation of the move on PSBs tomorrow as well?
No, it depends, what we are talking about because there were some stocks in same space which have gone down today, like Canara Bank and all.
No, so I'm talking about SBIs, PNBs
of the world. Yeah. So if we restrict ourselves to the larger names in PSU space, and if we take it case by case rather than painting every stock with same brush, SBI has a very good support around 150 odd zone, and we have seen a lot of put writing in March series because IVs were very high. So I'm not expecting SBI to breach this support anytime soon. And we are buyer at dips in SBI. PNB, if you see the beginning of series, there was 2 rupees discount in March future. So that clearly suggests that there is already too many short positions which are standing. And again, if you see the cash market price, then 70, 72 is good support zone. So these stocks are very near to their support zone and I'm not expecting big downside. But because of this budget, does it call for a big rally from current levels? I doubt. So IVs are still high in PSU space. All these names are active in option segment. It's time for, if you want to play for a weak perspective, short strangle is the name of the game in these counters.
Okay, we're running short of time, so I'm forced to come to you for your ideas as opposed to other stocks. I really wanted to ask about Maruti as well. But Mitesh, let me come to you for your stock recommendations. What is it that you believe traders can do? I see you have 3 ideas, Mitesh.
Yeah. The first one is a buy on Apollo Hospital with a stop below 1450. I would look at 1505, 1510 being tested on the upside. Asian Paints is a sell with a stop at 861 for targets of 820, and Bata India is also a sell with a stop at 462.5 for targets close to about 435.
Okay, CK, your recommendations?
I would be a buyer in Aurobindo Pharma. I think it did pretty well today. It's been doing pretty well recently. 662 is where it is at. I think that's start of a new price cycle. And with a stop at about 650, 55, I would look for a target at 685. A second stock that I would want to venture in with a buy would be Tata Elxsi. Tata Elxsi, I think, has a new entrant at about 1708, 1710. I would be a buyer, 1680 as the stop, and look for a target 1750, 1775.
Siddharth, what about your stock ideas for tomorrow?
Yeah, so I'm pretty optimistic on stocks like IDBI and HDIL. IDBI in month of September we have seen huge rally because of this announcement pertaining to reform in banking space, and that has been confirmed now in budget. So I expect today's stock did went up by 14-15%, then it corrected again. At current levels, I think stock is a good buy. I'm expecting it to go to today's high again. So I'm expecting 67 as my target price in IDBI, and 54 should be the stop loss for the trade. HDIL, again, a lot of small reforms or a lot of small announcement pertaining to affordable housing. I know this stock is under severe pressure because of its debt, but then we haven't seen any fresh formation of short position in second half of February series in this, and stock is quite light. It's consolidating since last 1 week. I'm expecting the stock to show a breakout above 61, and I'm expecting it to go to 71 odd levels. Fix the stop loss of 57 and go long over here.
A lot of buy calls from our experts, Mitesh, CK, Siddharth. Thank you so much, gentlemen, for joining in on the show today and giving us your thoughts. And in the midst of a buzzing newsroom from all of us here who put this show together, thanks so much for watching. But stay tuned to ET Now for a complete dissection of what the budget means for you as an investor and as a viewer.